Hey folks, David Frost, MyStrategicForecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis. Today is Thursday, November 13, 2014. You're looking at a daily chart of the SPY. And once again, it was kind of a little bit of a strange day in the market, but we put in another doji candle, if you will. And this is the 1, 2, 3, 4, fifth doji candle. I can even consider this as a doji candle. This is 7. And on the SPX chart from last night, that was another doji candle, while this one wasn't. So it's getting a little out of hand and a little ridiculous. Here you have a parabolic move up, and the market just won't pull back. I'm going to show you intraday today what happened, because the closing price today is not indicative of what happened. So just the average person turns on the nightly news and they hear, the Dow was up 40 points today, and they think, all right, great. Well, that's not really what happened today. Well, yeah, the Dow was up 40 points, but nobody cares about the Dow. The Dow's a basket of 30 stocks. It's nonsense. We care about the S&P. We care about the NASDAQ. We care about the Russell 2000. So what happened today was, let me get to the beginning of the day, and you had a move higher immediately, okay, little bit of a pullback mid-morning, and then another move higher, and then right around 11 o'clock, all of a sudden you started to sell off. And you know what, folks? This is a high of almost 205 on the SPY, 204.83, down to the low of 203.21. That's a pretty good intraday sell-off. That's a reversal day. Even though it didn't look like a reversal day at the end of the day, that's kind of a crack in the armor of the market. Now, it's not telling of exactly what's coming. It's not telling of exactly what's going on, but it's certainly a signal, and I have another signal or two for us in a minute. So that's what we look for. We look for these market tells. We look for the market telling us what to do. We look for the market to give us signals of what it's going to do next. So let's go back to the daily chart. And, what we're looking at is, and you can see it here from high to low, and then we finish almost on the flat line. And what that really tells you, when that happens, these days when you finish kind of around the open, that's telling you the market is indecisive of what it wants to do. It's a push and pull. It's the bears fighting the bulls, and the market is really winning, and the bulls aren't winning, and the bears aren't winning. The market's winning. It's not going anywhere. Eventually it will, but since I've been telling you for days that we're in a turn window right now. It really started on kind of Tuesday, Wednesday, and nothing really happened yet, but it lasts through basically the Thanksgiving Day holiday. So the catch is next week, and next week is Options X. Options X is, next week, and it's the third Friday of every month. And so you're going to see a lot of whipsaw action next week, and you certainly can see lower prices next week, and you can see higher prices. We just don't know exactly what's going to happen. But we're going to be prepared either way, because we're going to let the market tell us what to do. So here's the tell that we use all the time, and I haven't talked about it in several days because nothing's happened in several days with the IWM or the Russell 2000 index. And remember, this is small business across America. This is America. This is American business, okay? And the IWM today, as you can see, put in not a perfect reversal day, but it was pretty darn close. What happens is when you basically engulf the entire day from the day before, okay, on high volume, that's a good reversal day. You didn't quite engulf the entire day, and you didn't have higher volume than yesterday, but nevertheless, it was the first sign that we've seen, specifically in the IWM, which is usually a market leader, a market indicator of what's coming next on the upside and the downside. We've used it very successfully in the past, and until it doesn't work, we'll keep using it. And right now, I see what looks to me like the makings of a reversal day. We'll see what tomorrow brings. Okay, can there be higher prices? Of course there can be higher prices. Let me show you one thing that's on the flip side of the reversal day, okay, which is interesting. You see this day here, this candle here, this was the high pivot, and the high was 117.80. Where did we close yesterday? 117.90. Usually that means higher prices are ahead. We went up in the morning, and then we reversed. So it's just interesting. A close above this high from yesterday today would have been very bullish. But the fact that we couldn't close above yesterday's high is slightly bearish. It's not entirely bearish yet, but one more close below today's low, and I'll start to put on a little bit more of a bear suit. But Friday tends to be light volume day and tends to be not a down day. We've only seen like a handful of down days on Friday this entire year in 2014. I don't know. There's definitely less than 10. I don't remember the number. It's probably like 6 or 7 down Fridays. Now, where are we? We're towards the middle part of November, which means we only have about 6 Fridays left, which means we've had quite a bit of number of we've had like 40 up Fridays in the year of 2014. That's a little strange. So the fact that I say Friday is usually up, slightly up, or at least flat, light volume, that's what happens. So it's the percentages that I'm really quoting, but that doesn't mean tomorrow can't be a down day. But nevertheless, the IWM, I'm using it as a tell, as I always do, and I thought it was interesting, so we'll see what tomorrow brings. All right, let's move over to oil, because oil got drummed today. I mean, it was just taken out behind the woodshed one more time, and I'm going over to see the futures price right now on my other screen, and we've bounced up a little bit. We went down to basically my $74 level. I've been telling you 74.75 was my downside target for oil, and USO looks to be about 28, would have been equal to the 74. And today we hit a low of 28.10. And I think oil's low, and let me tell you what oil's low was today. This is the crude futures contract. I'm going to quote you. Just bear with me. I'm going over to the daily chart of my other platform. And the low today was 74.07. 74.07 on the low. And I've been telling you 74.75. So I believe that we're going to put in a bottom. Can it go lower? Of course it can go lower. Will oil go lower if the market sells off? It might. But if the catalyst to the market selling off has something to do with Iran or Russia and the Ukraine, or something where the price of oil may go up because of geopolitical tensions, that could send the market down, the price of oil up. We don't know what's going to happen. I'm just saying the price of oil can go up or down when the market goes down. It's just not directly correlated, even though it has been of late, other than the last couple of weeks. But when the market was going down, oil was going down. And the discussion was economic contraction, so we're going to use less oil and all that stuff. But we'll see what happens. But I think oil's going to put in a low pretty soon right here. And there's a lot of stocks where oil being down has put enormous amount of pressure on oil service sector stocks and all the companies that are around that sector. All the Southwestern Energies, your MLPs, your Transoceans, your Halliburtons, your Schlumbergers, all those ExxonMobil, Chevron, Conoco, BP, they've all got taken out behind the woodshed at some point in time. Some of the big integrated oil companies have been holding up a little better lately. Just as an example, let's take a look at Exxon since we're talking about it. And you'll see where, while Exxon got taken out behind the woodshed on the big down move, it hasn't really come down that far from where it topped out, but we're still hovering around the 94, 95 area. And we'll see what happens with Exxon and Chevron and Conoco and all those. But just want to point out that oil bottoming, and if oil starts up, it should put a bid underneath all the oil services sector stocks. and we'll see how that plays out. But I've got a whole list of trade setups that I'm looking at for the members that should be coming out within days, because if oil's going to bottom, as I suspect, these companies are going to catch a bid, and some of them are so depressed that we could see, 20, 30% rallies in these stocks in a matter of a few days. So it's a little bit of a push and pull, because if I think the market's going to come down, I'm not sure about those stocks. So we have to play it by ear and take it day by day. We'll see what happens into next week, and let the members know what we're doing with that on the horizon. So let's cover gold. And where's my GLD? Let's go to GLD. GLD and gold was up today, and then it sold off towards the end of the day, and now we're down a little bit. We're at 1160 in the futures contract, and you know what you can see happening here is this is sometimes called a triangle pattern or a pennant pattern, where it's basically narrowing. So what's happening is, when you have a large up move or a large down move, and then you have moves inside of that the daily swing between high and low becomes narrower and narrower and narrower. You see how it goes from wide to narrower, narrower, narrower. So what happens is that's a pennant or a triangle formation, and usually what will happen is the next move will be in the direction of the prior move. So and it's interesting because we had a big down move, and now we're putting in somewhat of a triangle, but then we had an up move. So I'm not exactly sure which way this triangle is going to break, up or down, but what I will tell you is that I still think there's one more down move in gold, and I would love to see gold come and visit 1100 in the futures contract, which is $60 away. And I think if we touch 1100, they'll start again talking about lower prices in gold. You've seen it in the news for the last several weeks. I mean, they've been taking gold out behind the woodshed in the media. Gold's going down to $1,000, $900. You don't need gold anymore. There's no reason to own gold. All the reasons we own gold in the past 5 or 6 years are gone. All that stuff. Demand is gone. All that stuff. When the media gets so bearish on something, it's normally a sign we're closer to a bottom. I still would love to see one more washout in gold, and then we'll become buyers, unless we see evidence that the price is moving higher and we can put in a higher low. That will also be a signal that we can buy, but we don't have either right now, so we're staying on the sidelines until the gold market, tells us what to do. All right, so this video is a little longer. I'm going to leave it there tonight, folks. I'm David Frost, mystrategicforecast.com. This was another episode of Common Sense Market Analysis. Thanks for tuning in.